Hello, everyone. Well, we are live. Hopefully, we're going to see a couple of you here today because this is done through YouTube as opposed to the normal software that we use, no? Yeah, so I don't think I can see a lot of information for you. So if you can see my presentation and can hear my voice, I could appreciate typing on the window. If everything is okay, you can type that you can see me. No idea if there is anyone here yet. Trying to figure out where I can see that. Oh, my concurrent views, perhaps. Maybe there is one of you right now. As usual, the important thing is that the recording remains for everyone. So, sound check and video check. Anyone can comment? I know that YouTube has a substantially bigger lag than GoToMeeting, so wait a little bit. Okay, I'll assume that everything is right because I can see it here on the feedback, and I assume the sound is correct. You can stop me at any time on the window, on the chat window. You can let me know if going too fast or if you can see my presentation or not. Hopefully, you will be able to see my presentation. Okay, sound check is fine. Thank you, Michael. Okay, so let's start with the usual. Now, I guess I should welcome the new members to the room. We seem to have a lot of new members now lately. So, a big welcome to all of you. I usually start the meeting going over the positions, the trades that we did the previous week. So last week, it was a short week because of the 4th of July holiday, but we have 4 trades and we managed to get 3 wins and 1 neutral. 1 neutral means like losing very little, $5. So it was a fantastic week. It was like $1,000 just for that week. No, it was a great week. But this week we started really bad. Yesterday we have a loss of 500, so it already cuts into the profit from the previous week. And we have a trade for today that is very likely to lose, although it will lose only $200. It won't lose that much. But overall, I think that the accuracy for the last 10 trades is gigantic. It's a 90% or something like that. It's a gigantic value. And it might drop 10 to 80% if it fails today, no? So, but even with those failures, the system is outperforming too much. And I say this because outperformance, even though it's nice to receive the money, is terrible because these systems tend to oscillate a lot around the mean. So the mean accuracy is around 60%, and we are hitting 90s. That means that it is bound to revert to the 60% at some point. So I will recommend it for you guys that are new to the room, for just arriving and trying to see what we're doing here. I will recommend for you guys to wait before starting your first trade because the system is outperforming. So it's going to hit the 60% at some point. So I expect two more failures or 3 more failures in the near term. So let's wait for them. No, better just wait for the failures and then come into the system. So for those of you that are new, it's better to wait for the system to revert to the mean before starting. And for those of you that are following the system, outperformance is a great time to reduce sizing and then wait for underperformance to increase size. And I have a question here. How did Stable and Tune do last week? They did fantastic. Tuned. You mean Tune for last week? I don't have the numbers here. I think the Tune actually made money last week. Yeah, I will post. I will post the statistics for Tune. I haven't looked at it, but I think I quickly looked for it on Friday of last week, and it was actually coming back from the dead. It was interesting. It was actually making tons of money. But I will provide you with that after the presentation. Sorry if I don't have hard numbers. Stable did fantastic. Stable did even better than the SBJ. I think Stable did like $300 more, like 1,380 more. So overall, it was a good week for the systems, and I think that they are reverting to the mean. They should revert to the mean this week. Okay, so in terms of market regime, now finally let's look at what the market is doing. The market is right now, the GT level is extremely elevated, 6,197. And let me quickly show you where you guys can see this. I know because we have new members of the room. You can see the GT level in a variety of places. You can see it here in the variance center. And now it's even higher, 6,207. And you can also see it on the new experimental variance center, which is here. So it's very elevated, the GT level, but it's meaningless. It is really not meaningful because if you look at the gamma distribution on any of the tools, you can see that you have these two spikes here on 185 and 190, 6,185, 6,190, and then you can see this other one is 260 and 265. This is an iron condor, and this is a gigantic iron condor. I guess maybe here it is easier to see in the gamma imbalance chart here. You can see also the spikes there. So there is a huge iron condor, and this is a whale that from time to time trades with us for some reason, and it opens north of 30,000 contracts, if not 40,000 contracts. This is a gigantic, massive position. And so then it messes up all my gamma imbalance computation. So because the gamma imbalance is assuming that all of this gamma is real, but most of the gamma is not real because it's a put spread. So the gamma of one leg is canceling the gamma of the other leg, like it's canceling most of the gamma. So the position, even though it's a gigantic position, should have a very little impact on gamma. But the code that computes the GT level doesn't know that. There is a. I know there is an iron condor because I can see it and because we have seen it before, but the code doesn't know that, and therefore this GT level that you see here is not realistic. I think the GT level is probably around 6,070, 6,075. We'll see the true colors of the GT level after the market closes. Once the market closes, these options will disappear, and then we'll be able to see what the GT level really truly is. Okay, so for now, that's the only thing I wanted to mention about the GT level that is being meaningless because of the iron condor whale. No. But despite the distortion, the reality is that the market remains in a long gamma regime. No, the market is long gamma, exhibiting extremely low volatility, which is what we expect, and it's also showing little upside drift. Also, I wanted to mention that this is consistent with what we expect for the summer. Now, not only we are long gamma, we are also doing summer trading. We should ask ourselves, like, who is trading during these months? No, like during late June, July, and early August, and the answer is no one trades in these months. There's almost no one trading, very little trading volumes, and also trading volumes are really small, and also the professional, the big guys are on vacation. I mean, if you are a superstar trader in a big fund or a big proprietary trading desk, you are on vacation. No? All of the pros are on vacation. The only ones that are working manning the desk are just the B team or the C team. No? The interns are learning this stuff. People that cannot make decisions on their own, and they have to always consult the superstars. And the superstars are on vacation right now. So most of the time, I expect the market to do nothing for the next several weeks. No, with the exception of yesterday, we got some noise because of, you know why we get noise, because tariffs are rattled from time to time. But the noise is dissipated, and we got another extension for it, and this is the last extension ever, and it will be the last one until the next one. No, so it's only noise, and I think summer is going to have this kind of regime where extremely low volatility. And we can see it here. We can see the close-to-close volatility. And this is a coincidence. It has been quite some time since we have seen realized volatility the same across all time frames. So it's 10% no matter where you look at it. Realized volatility is 10% at the weekly level, is 10% at the bi-weekly level, and it's also 10% at the monthly level. So 10% is a very low number, it's a magical number, it's extremely low volatility, and across all time frames, and this is consistent with the long gamma regime, and this is consistent with vacation mode. Now we are on vacation, summer effect, and Vienna long gamma. As well as VIX. We look at VIX, and VIX is 16.6, which is exactly the same value as the last time we did the live video, which was on a couple of weeks ago. Now, and this is sticky. Dealers usually need a lot of encouragement to drop VIX even further. Now, if you want to see VIX at 15, 14, even lower values, man, we will have to see this market doing nothing for months and months and months. So right now, 16.6 is the lowest value that dealers tolerate, and it shows that they are a little careful, but not that much, not really. And if we look at the 1 week VIX, is at 13%, and it's extremely low. There are no expectations of moves for next week. No, I don't think that dealers are expecting anything happening next week. So overall, volatility is very low, very contained, and we are on vacation. No? And you can see that in the term structure. This is very interesting. This is the term structure from last Tuesday on July 1st to today, July 8th. And nothing has changed. The red line is the options, the term structure from last week, and the blue line is the current term structure. And you can see they are pretty much the same. They're just aligning. Nothing has changed. As I mentioned, dealers are on vacation mode, and of interest is that there are no bumps. You don't see bumps in this chart. You don't see like dealers pricing particular events like the end of the tariffs in August 1st, which I will expect to see at some place around the 20-25 day mark, but it is not there. There are no bumps. There is nothing there because everyone is on vacation, and because we know that nothing is going to happen for a while. Of course, this can change really quickly, and it usually changes really quickly if something meaningful happens in the meantime. But for now, we see at least that dealers are not planning, are not pricing anything unexpected in the near future. Okay, so smooth sailing, as they say, is pretty much a smooth sailing. And you can see this also with intraday realized variance. Remember that intraday realized variance is just realized variance measured minute to minute. You can see it here. Let me show you intraday realized variance for you guys here. You can see it on this chart here, or you can see in the new one. I like it in the new one. This is the value that we are seeing. It's extremely low value, 7.63, and those are really low values, and you can also see that they are low on the historically. They have been below the 10% line for a while, for several weeks now in this chart. The only thing is that a small bump yesterday, just because of tariff noise, but overall liquidity is very plentiful, and it is plentiful because we are on vacation mode. That's why it's plentiful, because everyone is on vacation, there is no trading volumes, and if there is no trading volumes, there is plenty of liquidity. The market will remain range bound for quite a bit. No, that's how the things are. So also smooth sailing. Now looking at this chart is pretty much a smooth sailing. Now variance risk premium. For those of you that are new, variance risk premium is pretty much the difference between what VIX was pricing a month ago versus what happened in the market during that month. Now, if dealers really have really fantastic computer models and they have tremendous powers of forecasting, then there should be no difference between the two things. Now, as I mentioned, in a perfect universe, the red line should be zero. No, there should be no overpricing or underpricing of volatility. That's what it's called variance risk premium. But due to many factors, dealers tend to overprice options versus the actual expectations. Now, it's an ever-present quantity, and you can see that most of the time it's true. Even though we got a few negative periods in 2022 and at some point in 2024, and even this year we got negative BRP at some point. But right now it's positive, and it's stable, and is not that far from 100%, which means that implied volatility is almost double what realized volatility brings. And because of that, and because of the summertime, and because of the summer mode, vacation mode, I think there is an edge on systematic BRP extraction. For those of you that love to extract variance risk premium or sell premium in general, I think you can do it. You can either do butterflies, like weekly butterflies, centered around the drift parameter. No, there is a small drift in the market that is so easy to price, and you can see what is the drift price into the options, and then center the butterfly around the drift, and just collect the premium, no? Make money like that week after week, no? Or you could also short iron condors. Well, this kind of trades, the trades I'm talking here, are meant to be done with a little longer time frames, like a couple of weeks time frames or 1 week shorter, because that's where variance risk premium is more prevalent. You will not see variance risk premium in 1 day options like the ones we do. There is variance risk premium, but it's not as fat, and it's also not as easy to capture as the longer term BRP. So for those of you that like to do things on the side other than the official trades, I think this is a good way to go as well. No, have the edge on systematic BRP extraction with butterflies. And if you want me to go a little deeper on this, just ask me, and I'll post in the room a few like let's say templates of how to structure the trades. No? In terms of ambiguity, yes, I will do it, of course. In terms of ambiguity, as expected, it is very close to 0.2, and I bet that it will hit 0.2 today. So ambiguity is, I think that with in YouTube you cannot see my mouse, but if you look at ambiguity as the dark line, it's very close to the 0.2 area, and previously, every time that we hit the 0.2 area, we tend to see a small market correction. Right now, I will say that it's too early for that because of the summer effect. Even if there is a correction in the cards, it's too early for the correction. But it seems that also every time I say that it's too early, the market, starts correct right away without me. I have not been able to do an end of the world lottery trade in a while because I'm always late. Even though I mentioned it in the live video, by Monday, then the correction is over, and they last like 20 minutes, and then after 20 minutes, everything is over. So I think it could be a good edge now that options are very cheap, that everyone is on vacation. Maybe towards the end of the week, we can look at this again for the next live video on Friday. We could look at this again and see if there is still opportunities to do like $200, nothing really cheap, and play speculative downside in the near term. But it is interesting to see ambiguity again around the 0.2 area. Well, and what is the trade plan? Well, the trade plan, as usual, is to do Ultra SVJ, the stochastic volatility with jump diffusion. Is the official system in the room, and that is the one that I'm tracking on the trade table. I have been terrible at tracking trades this year. You notice that I was better last year, but this year have been worse because I'm doing overrides and not updating the table at all. So I'm trying to update the table more in July. So the trade table tracks the SVJ system. Sorry about that. And also, for those of you that want an alternative system, the constant stable system that is also in the variance center. Now you can take a look at the constant stable system here. This one that says constant stable. That one seems to be performing much better than the SVJ system at this point. Now, like for instance, for the last couple of trades, they seem to be suggesting the same, but those are the systems, that I mentioned. And incidentally, now that we are here in the variance center, let's stay in the variance center and look at a couple of things. The GT level, which I mentioned, that is meaningless because of this the whale trade. So let's wait until 4 p.m. and see what level is. My bet is that it's going to be around 6,070 something, 6,080 something. Something that is actually meaningful is the realized variance is low. It's very low for the day. Kurtosis is extremely high, which is okay because it's very low as well. Because kurtosis can be can go really high when realized variance is very low because it only takes a few points to move it. No? And then in terms of the trade that we have from yesterday, you look at the trade from yesterday here table, which is this one that I'm highlighting. It was a long iron condor betting that the market will go over the 6,255 or 6,190. And as you can see, the market is basically flat. It's 3 points or 2 points away from where it closed yesterday. And my expectation is that that's how it's going to close. The market is not going to do anything from here until the end. There is nothing going on in the market. It seems that no one is on the market trading today. To see the range is super tight between the lowest point and the highest point. This is a very tight range. Volatility is very low, and I don't think that there is anything there. I don't think that we'll be able to see it. And one of the ways I like to use the new one is that you can see the sigma ranges, and none of the sigma ranges favor any of the trades, not even the 2 sigma. A 2 sigma move will be 6,200 and 6,261. No, this is a 95% confidence interval, and it's tighter than the interval that we need on our iron condor. So therefore, it's very unlikely that we are going to win today. So it's a loss. Now, for all practical purposes, it's a loss, and the market hasn't been able to do anything, and I don't think it will do anything until the end of the day. Of course, famous last words. No, anything could happen. We could have something coming on the wires. But other than that, if you leave the market to whatever is the internal organic trading, I guess traders are doing nothing today. There is nothing to be done today. So long iron condor made sense yesterday because we have the little noise from tariffs, but then the market has moved 0.02%. It hasn't moved. If you notice, the SBJNet is also suggesting another long iron condor. I look at these two things here. And for tomorrow, which I think I like better because as long as these strikes get tighter and tighter, I like long iron condors because then it only takes a few points now, like 25 points to break. Then it's okay. 25 points are easy to make, in particular after a day when the market doesn't do anything. We usually the next day moves a little more. So we'll see. And I think that's it. I think this was a very short live video. I appreciate you guys joining. Thank you for joining. This was out of band, as I mentioned. It was not an official video. It's because we had the 4th of July holiday last week. But I'll see you guys on Friday. We have another way on Friday. We can go over other things, and it's going to happen with the usual tools. And I'll make sure that to post something on the room about extracting variance risk premium with butterflies or iron condors. In any case, thank you. Thank you guys for joining, and I'll see you in the room a little bit. Take care, everyone.